Hey, so this is part two of the acquisition story of Impactable. And so in this one, I'm going to cover the big question that a lot of people ask is how is value calculated? Like how do they come to the price? So it's different for different industries. It's different for different company styles. So, for example, we were positioned at the time as a service business. We have staff, labor is our biggest cost. We are a service providing company. So that gets calculated differently than a software company or a SaaS company. So that's an important detail because a lot of times you hear these valuations and you see these crazy valuations for SaaS companies, and it is different. And so the other thing I would take into account is that it's a conversation. So obviously the buyer, there's some standard practices as far as it's usually a multiple of bottom line profit. So I know a lot of people hear that it's a multiple of just top line sales or revenue, but that is almost never the case. If you are a unicorn SaaS platform where you can even get these billion-dollar valuations while showing a negative cash flow because you're just pouring all of your profits and then more into marketing to grab up market share. That's a whole different thing. If you are a bootstrapped company, service company who is trying to get a valuation for your business, you're going to be judged on profit. So if you have $1 million of sales and you're showing, 150, $200,000 of actual bottom line profit, then you're probably going to get a valuation of about 3 to 5x of that cash flow. So you might be looking at, what is it? If it's a 200, that's 600,000 to a million for a valuation if your cash flow is about $200,000 a year positive. There's a lot of other factors to think about in that context. There's things that can add and take away from the value as part of the due diligence. So the short answer is there's not like a just calculator that you can input and see the exact value of your company. It's going to be a multiple of cash flow more often than not. And then there's other things that can give or take away from the value. So one of the things could be your data. If you have kept good records of your past client history, your call bookings, your leads, if you have a significant email list, if you've invested money into building lists of targeted prospects, that are relevant to your industry that maybe just haven't been fully tapped or haven't been fully harvested, that is useful, that has value. If you have, a whole history, one of the things that added value to us is that we were a low price point, high volume kind of agency. So we had, 1,000+ records of past clients. What we didn't have and what I wish we had was more detail about the clients we served. We didn't have great data on the exact how many or what percentage of our clients are in these industries or of these company sizes or of these revenue types. So one of the things that buyers were looking for when they approached us was, well, what kind of clients do you serve? Well, from what industries, from what company size, from what revenue ranges, and do you have an idea or any data of how those are distributed? How many of your companies that you've served or are currently serving have 500+ employees or 50 to 200 employees. And at the time, we didn't have great data on that. So that's something I wish that we had more of, some qualitative or quantitative data on our actual client history. But I did have, all their names, emails, websites, phone numbers. Like I had the actual data on them, just not, the firmographic data on them. So that's another thing. Some other things that could add value is organic traffic. If you've actually invested in your SEO, if you have a high authority ranking for your domain, if you have solid intent traffic from organic sources, same with paid. If you've spent money in Google search and LinkedIn ads, if you've built solid database of history and spend, that has a value because you've invested in that, you've carved out that channel, you have a predictable pipeline, and that has a lot of value. So there might be some value in your Google Analytics, there might be some value in your paid channels, your SEO. The actual website is an asset if you've spent money in that, if it's a solid predictable source of revenue that converts, and even the domain name. Some of these buyers are really keen on having a solid domain name. So they might be looking at you because you're in the space that they want to be in, and you have a very attractive domain name. I mean, I had purchased a domain name for $20 with the .co because that's what I could afford, but that's something that I realize is actually valuable, to buyers. So there's a lot of other things that can factor into the price, but it's a conversation between the two, because one of the things that, I would argue with my price is that, just like some of these SaaS companies, I was folding a lot of our possible profits back into the company, in the form of marketing so that we could expand faster. So instead of just leaving that out and just showing more profits, which I could have done, instead of pouring that into marketing, I actually, poured it into marketing. It showed less profit, but I could argue that, if we wanted to slow down growth, that we could flip that, and that we could show, X, Y, and Z. And so I was also very meticulous with a lot of the tracking, a lot of the metrics. Most of mine was just in Google Sheets. Like, we didn't have a real CRM, but that could be also the software that you use if you have a CRM that has data in it, or even if you just have really meticulous Google Sheets with a lot of data in it that has value to them. Email lists are a big one that they ask for. And I'm trying to think, but those are some of the things. Like, it has value beyond, and also your team. So if your team is in kind of a niche area where that amount, having a high concentrated amount of knowledge on a specific like niche subject is hard to come by, like, that's an investment of time and energy and resources that you've poured into it. For example, ours is LinkedIn ads. And so if we have 15, 20 people who are LinkedIn experts, and that's not something that a lot of companies around the world are pouring their resources into. So actually having one of the higher concentrations of experts in that small, tiny area was actually pretty valuable. Um, and our team was part of the equation of, what this particular investor was looking to buy. So that's some of the things you can think about, when it comes to how you're evaluating your company, what gives value and what doesn't. The things that you're investing into long term, is it likely to grow? Is it likely to gain momentum? Have you invested in SEO? Have you invested in paid ads? Have you invested in, your brand and established a name for yourself, a following on different organic channels? That all factors into it, and it's a conversation between you and the buyer. But yeah, it starts with usually it's a multiple of cash flow, and then it's a conversation that goes from there.